Hey folks, welcome to Weekend Technical Analysis Update by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This Weekend Technical Analysis video is for Monday, November 12th through Friday, November 16th, 2012, and is brought to you by InTheMoneyStocks.com. Alright guys, what you're looking at before you is the SPY on a 10-minute intraday basis. So basically what we're looking at here is Friday's action from here on over, Thursday's action, and then a little bit of Wednesday's action. I can zoom out if we want. We'll do that in a little while. But first and foremost, let's discuss what happened on Friday. Friday we saw the markets attempt a bounce early in the day. This bounce came in based off John Boehner, the head of the Republicans, coming out and kind of extending an olive branch. It made it look like the fiscal cliff, solving this issue could be possible. However, Obama came out right here, guys, right here, with his speech, and he was very confrontational. All right, now again, I think this is more posturing in terms of, hey, I got to play hardball to get at least part of what I want, which I understand, but the market still got skittish off of it. And no sooner had he come out and kind of made his statements, the market sold off, back off their highs, bounced a little bit and came back in, and we basically closed the day on Friday flat. The Spiders up 12 cents, S&P up 2, NASDAQ up 9, Dow up about 4 points. Now, again, going forward, you have to remember this is all about the fiscal cliff. All right, now Europe is going to play a role as well, but right now the market's focused on the biggest thing for the U.S. markets and for the jobs in the U.S., which is the fiscal cliff. All right, if they don't solve this problem and we fall off, people are saying, analysts are saying, economists are saying, we are going into another deep recession. So it's very, very important, obviously, to get this taken care of, and that's what the market will focus on. Now, we're coming into a week of options expiration. Right now, there are quite a few more puts out there than calls, so I have a little bit of a summary of what I think the markets will do. All right, number one, we have to recognize the levels we hit. First of all, the gap down on Friday was small gap down. We gap down right to the 137.50 level. Why is that important? Well, if I zoom back here and I go all the way back to August, check this out, guys. Again, all the way back, keep going, and you get to this point right here. This is the 137.50 level. All right, so you can see that there was a former level here, and that's why the market bounced off that level. Remember, here at InTheMoneyStocks.com, everything we do is based off technicals and proprietary technical analysis. It's things we have created here that work and make us into an 8 out of 10 type swing trading management team. We basically tell people how to do this. We teach them. We give out trades. We give out swing trades. We do videos on this stuff, and you will go away after being with us for a few months knowing how to trade the markets, knowing how to do it better than the financial institutions out there who trade this stuff every single day. All right, bottom line is, this was why you had a nice bounce on Friday. We talked about it in the intraday stock chat. The Research Center is a service we offer here. That's for swing traders and investors. The chat room is obviously for day traders at InTheMoneyStocks.com. Now, bottom line is, there is a little bit of an inkling here early in the week coming up that we could head down and test this level. See how this is a major gap fill? Now, we obviously hit this one. This is what we hit on Friday, this line right here, the 137.50. But if you go down to the 136.70-ish area, you have a very important gap fill that eventually does need to be triggered or hit. And the other thing that makes me kind of interested here, if I zoom out and I zoom all the way out, we actually have another trend line coming in, and you can see it right here, all right? And I have to zoom in even more or zoom out even more. Now, look at this. So here's your key level, right? So here's your major level right here. This is the one, the gap fill, the 136.70 level. Take a look at if you connect the pivot low going all the way back to November 2011, and then you connect it through the low here of June 1st, around June 1st, 2012. This line is coming right into that level. You guys see that? So again, basically what I'm telling you right now, let me summarize it, make it very, very simple in layman's terms. The market this coming week, all right, there are two possible scenarios. Ultimately, they both result in a bounce. All right, number one, the markets float up early in the week on light volume. Remember, we have a holiday on Monday, so the volume could be very, very light, in which case the markets float up a little bit before selling off later in the week and going to that trend line, those two trend lines at 136.70. All right, that's scenario number one. Either way, we get a bounce here either way. All right, and there's very minimal downside. There's only downside to about 136.50, 136.70, that area right there. The second scenario is this. Early in the week, they sell it off, they tag that level, and then we go up from there. Okay? So again, do you guys see how I'm arriving at that? You're basically looking at major trend lines here. Not only is there a key gap filled on the intraday and then the daily as well right here, going straight across, but this line underneath gives us even more solidity, or kind of a key level to realize that this market should, again, there is a little downside here, but it's minimal. Very, very minimal. Let's go to the 60-minute, see it on the 60-minute. Here's the level, obviously, on the 60-minute. That was the low on Friday. If we zoom out a little bit more, here's your gap fill going back to August. That August gap fill is at the 136.70 area approximately, which is only about buck 40 from where we currently closed on the spiders, which is very minimal. That's like 10 to 14 S&P points. Very, very small. And then if we zoom out here more, guys, and you connect these lows, this is exactly what we're looking at. Look at that. Okay, so again, what I'm saying to you, what I'm going to do myself, and I've already found 15 swing trade possible setups this week if this does play out. Whenever the markets come down, and ideally I'd prefer if they came down Monday or Tuesday to get us in as early as possible. But basically what I'm going to be doing is I'm going to be looking to buy the market if it comes down to the 136.70 level. All right, I'll buy stocks. I think Exxon's not too shabby. Google's coming down to the 200. I mean, there's just tons. We can go through a couple of them here. But this right now is the level. This is the golden place. This is a level. We've had a great sell-off. Now you're going to go into a little bit of a bounce. My expectation is this. Once we hit this gap fill, you bounce until at least after Thanksgiving. All right, it makes sense, too, because the volume is going to get light around Thanksgiving. A lot of people are going to be on holiday, relaxing, and therefore the light volume also gives you a neutral upside bias. My ideal scenario, though, is we tag that gap fill first, and that trend line. Obviously, the sloping up trend line is the big one, and then that goes in. All right, I will be buying the S&P there. I will be buying individual stocks there. You can get all these swing trades exactly to the time second I do it, time stamped, if you join the Research Center. Take the 7-day free trial. All right, guys? But this is the beauty of what we do here. We find these levels. We're better than the institutions. All right, we're better than the hedge funds. We're better than anyone out there. And the price points tell the obvious tale here. Now, this is Goldman's chart. Goldman hit off a little bit of support. If Goldman happens to flush here, the 200 would be ideal. I don't think it gets there, though, short term. That's still another move down of about 6 points or so. It'd be tough for me to imagine that we get down there unless the market decides to go way lower, which I don't think it will. What I like, though, is this. Now, Exxon almost got there already, but if Exxon can dip a little bit again, 200 MA on Exxon is a beauty. All right, Google, let's take a look. Now, Google was up 10 bucks, but the 200 MA is right here. That's a beautiful level as well. Beautiful level. I mean, you could go through any stocks out there. Any stocks you want. There are some key ones. Let me take a look at CMI. See, look at this. All right, so CMI had a great run. Now it's been pulling back. See how the 20 is rising into the 50? So the 20 is going to slope up right here into the 50. If price can come down into that level, right around the 94.75 level, bam. That's a beauty. That is a beauty. Now let me just go over a couple trades I gave out Thursday going into Friday so we can track their progression. One of them that I loved, and actually I continue to love it, and I love it because everyone else hates it, and this is the beauty of it, guys. You got to be a contrarian. All right, if you're not contrarian, you're losing. It's just that simple. All right, when everyone else hates something, and if you can find PPT, which is PPT methodology, it's a proprietary technology we teach here. It's a methodology that we basically give you and teach you how to use and utilize. If you can be contrarian and find PPT methodology, you're going to put yourself in basically a 90% chance of winning that trade. I mean, it's unbelievable. That means 9 out of every 10 trades you're green on and you're making money on. Now, wouldn't that be nice for all of you out there? If you could actually say, hey, listen, I made 90 trades, I made 100 trades and 90 of them were winners in the last year or whatever. All right, bottom line is check out this chart. You want to see how I found this? First of all, Vivus, they have that weight loss drug that competes with Arena. Their sales were crappy on the drug a couple weeks ago. Look at the stock. It came down literally from 24 bucks down to 10 bucks. All right. Now, when it was trading at the lows on Thursday, and look at the bounce on Friday. I called this out. I gave this to all my members on Thursday night, and it hit Friday a new low on the open at 10 bucks, and before racing up, it went all the way to 11. That's 10% gain in one single day. 10% gain in one single day. Ridiculous. Now, bottom line is this. How did I know? Well, first of all, everyone hates it. I mean, I was just hearing everyone bash it. That gets my attention. Oh, wait, everyone's bashing it, and it's down from $24 all the way down to $10. That's over a 50% decline, and everyone hates it still. There's a lot of shorts in it. Oh, that's also interesting because they have to cover eventually. They're going to look to cover. Then what I did was I zoomed out on the chart here. I said, wait a minute. So this, everyone hates it, and it just came into a technical support area, pivot low, gap fill, going back to the beginning of this year. All of a sudden this looks freaking good. This looks like a freaking sundae with chocolate fudge and whipped cream and cherries and you name it. All right, now I went to the next bigger time frame, and I looked at the weekly chart. Oh, wait a minute. This has just hit the 50 MA, the 200 MA here. 200 moving average on the weekly. Damn, this is looking even better. This Sunday just has gold flakes on it now. And then sure enough, go to the monthly. It just hit the 50 MA. Sure enough, tells me to give it to my members. We talked about it in Thursday night's video going into Friday. I said, listen, guys, this thing looks sweet. Members bought it. I even played it on Friday as a day trade, just buying it at around 10.20. I wrote it to almost 11 bucks. But bottom line is, when you get a chart that looks that good, when the levels are getting tagged, when there's supports on almost every large time frame that you are hitting at that second, when everyone else hates it, and it's showing that, it's going to bounce. It is absolutely going to bounce. And sure enough, closed up 60 cents, but it was up a whole total of $1 from the lows of the day. I wouldn't be surprised if this gets another bounce, but you know what? I'm out of it already. Some members are still in it, and that's great because I think it's going to go a little higher first. But it probably goes to about 11.50, 12 bucks, somewhere in that vicinity. You make 15, 20%, you're done. You couldn't give a crap. If you give a crap, you're a loser. Where it goes after that. This is trading. This is swing trading. You don't love stocks. You don't fall in love with stocks. You use them and abuse them. All right? Because anything else, it will use and abuse you and take your money. And that's what we do here. All I'm about, folks, all I'm about is making my members money and those who are interested in learning. I want learning people. I don't want someone who wants to get a fish for life. I'll give you your fish in here, but I expect you to learn. And I've drop-kicked plenty of members out of this service. I'll do it more because I don't like the fact that they think they're getting stuff without actually putting anything in. You want to spend a little time, you want to learn, you'll get the world. You'll get the golden nugget. Anything else, unacceptable. All right, guys, I got to get going. Awesome week coming up. Swing trades galore. We'll be putting out more and more tonight into tomorrow. No Hype Live broadcast, which is part of the Research Center. You join the Research Center, you're going to get the live broadcast tonight, 9 p.m. Eastern Time. I will be going on live with live charts, answering all questions on the market. We'll be rocking that. In addition, this week, as I said, swing trade alerts, videos, methodology. You got it. We are going to be covering it and profiting. Come join us here at InTheMoneyStocks.com. Take the 7-day free trial.